Not every Bendigo suburb is striking gold. Some are dead weight and they could effectively drag your portfolio down with them. Hey, I'm Oliver, Value Add Buyers Agent from Insight to Buyers Agency. We help investors unlock and manufacture equity with design-led strategies and data-backed market fundamentals. Welcome to Worth It Bendigo, the series where we cut through the headlines and hype, and as investors, we're asking the real question. And time for a showdown. California Gully, Long Gully, Huntly. These are three Bendigos bottom tier. Here's a T. Which one is a true worst suburb and which one might secretly be your best shot at profit? Today, we're putting Bendigo's roughest contenders into the ring. Let's find who's bad, who's worse, and who's just misunderstood. Now, these three suburbs have the reputations that nobody wants. Crime talk, socioeconomic disadvantage, or just being plain boring. But investors like us, we don't care about gossip unless it's affecting yields, vacancy, or growth. So let's dig in. Let's unpack it out. California Gully has the reputation of being one of Bendigo's toughest suburbs. Median prices are affordable, around the high 400Ks, making it one of potentially Bendigo's cheapest entry points. But you guys would know cheap doesn't equally mean good. The suburb has a higher crime perception compared to Bendigo's average, which keeps that owner-occupier appeal somewhat quiet on the lower end. Your rental yields can look healthy on paper, potentially closer to 5%, but you sometimes trading stability for risk with higher tenant turnover and longer vacancy periods. California Gully might look attractive to cash flow hunters, but for a long-term capital growth, potentially capped, unless there is a bit of a major suburb-wide change, or equally a bit more of an imbalance of supply versus demand. Next up, Long Gully. This suburb carries one of the toughest reputations in Bendigo. Let me tell you why. Historically tied to the lowest socioeconomic status, it sees higher unemployment, welfare dependency than the city average. The median house prices hover around that 430 to 450 mark, making it cheap, but again, perception matters. Many buyers and renters tend to avoid that area altogether. Your vacancy rates are patchy. Some streets rent well, others sit empty. That inconsistency makes it risky. Long Gully is often Bendigo's poster child for the worst suburb. Unless you're a seasoned investor playing a high-risk, high-yield strategy, this one is best left off the list. Now let's talk Huntly. Huntly's problem isn't crime or reputation, it's oversupply risk. Over the past decade, massive land releases and housing estates have somewhat flooded the pocket of Huntly with a lot more new stock. Whilst the median pricing is sitting at about 480 to 500K, the growth is patchy because when supply rises and demand then can somewhat struggle to keep up, we know what happens. Yields are softer to often around that 3.5%, making it less attractive compared to the inner pockets of Bendigo. Huntly isn't bad, in the same sense as Long Gully or California Gully. It's a little bit more of a timing game. If you buy in a new estate at the wrong point in this cycle, you kind of risk stagnation. But if approvals are slowing down and infrastructure catches up, then Huntly could quite possibly perform in the long run. Round 1, affordability. First up, investors want low entry, affordable. Well, California Gully sits at $485, while Long Gully sits at $512,000. Huntly, $622K, but Huntly, for what's meant to be that family semi-rural option, it's not just pricey, it's Bendigo's suburban diva. Round 2, California Gully has seen an increase in price growth at 3.1% over the last year, 88% over the last 10 years. Long Gully has seen a 5.5% increase in price over the past year, 102% over the past 10 years. Where Huntly has grown 1.2% over the past year, over the past 10 years it's grown 113% compounded. Huntly is somewhat looking a little bit more sluggish in that short term, about that 1.2%, but its 10-year record is king at 113% compounded over 10 years. California Gully, safe, middle ground. Not bad, not brilliant. The shocker is, Long Gully might be the roughest to live in, but investors, is that a growth beast? Round 3. California Gully, 4.71% yield at best. Vacancy at about 1.25%. Let's face it, still quite strong, right? But it's about choosing tenant and managing your tenancy well. Long Gully has a 4.21% yield and a 1.61% vacancy at the moment. Huntly, your yield's at about 4%-ish. Vacancy is the weakest at 4.23%, and that is pretty high. Your cash flow crown, California Gully, strongest yield, lowest vacancy. Tenants queue up sometimes here, even if the infrastructure budget is somewhat of a joke. Long Gully, it's stable enough, but nothing too crazy. And yes, Huntly, the yields are scraping at 4% with a worst vacancy rate of all the three. 4.2% of rentals are somewhat just sitting empty here, and that is a massive concern for investors like us. Round 4. IRSD, California Gully sits at 1. Renters, 34%. Infrastructure spend, California Gully, $492 per capita. IRSD of Long Gully is at 1, and your renters to owner occupier ratio is at 43%, being the highest. Infrastructure spend, Long Gully, $3,639,000. Round 4. Let's look at the IRSD score of Socioeconomics. Huntly, surprisingly, is sitting at 5, which is much better. Your renters, Huntly, 21%, being the lowest. Again, very much first-time owner occupiers. Infrastructure spend, Huntly, 7,565, and that is surprisingly the highest. Here's where the reputation start to make sense. California Gully and Long Gully both scrape the bottom of the socioeconomic scores, an IRSD of 1. You'll hear locals say it's a little bit rough, and they're not wrong. Property managers will give you the same type of feedback. Long Gully has nearly half of the renters. Huntly's the opposite, owner dominated, decent socioeconomic standing, and a lot of that bigger money is pumping in. On paper, Huntly looks the healthiest, but remember, vacancy is a somewhat telling the story, and as investors, you kind of want to stay away from a 4% vacancy rate suburb. Round 5. So, who's Bendigo's worst? California Gully, the yield suburb, affordable, tight rentals, but zero infrastructure support. Long Gully, the growth beast with a dodgy rep. Looks bad socially, but investors who can absorb that risk could ride the upside. Huntly, the wannabe rich kid. Expensive, great long-term stats, owner heavy, but right now, very weak rental demand. So, the crown for the worst goes to, put it down in your comments. I am unfortunately crowning it to Huntly. And why? It's the priciest out of the two of them. It's the priciest. It's weakest on the short-term growth. It's bleeding cash with a vacancy rate of 4.2%. Investors buying now risk paying with premium prices for empty rentals. But don't sleep on Long Gully. Yes, it's rough, but rough doesn't mean rubbish. Sometimes the ugliest duckling gives you somewhat the fastest equity. So, there you have it. California Gully, the yield hunter's pick. Long Gully, the roughie with growth. Huntly, the wannabe that fails the investor stress test. What do you think? Did we crown the right loser? Drop it in the comment below and tell me which bad suburb you want me to roast next. If this is the kind of data-backed golden nuggets that helps you see past the hype, hit the like, smash the subscribe, and click on that bell. And if you're watching this thinking, I want someone to cut through the bull and find me the right suburb, you guys know what to do. Book in a call with me. And of course, I'm Oliver from Insight to Buyers Agency. It's unlock your equity, even in suburbs everyone calls for worse. And now, of course, see you on the next one.